Hello guys, I want to talk about and go back to talking about universal life insurance policies. A couple weeks ago I talked about the IULs, Index Universal Life Insurance, that matches or can match with the stock market. Now, universal life also falls into the permanent life insurance bracket or family. It falls in line with Index Universal Life and also whole life. The main feature of universal life policies is the flexibility. That's the main feature and main word. People like flexibility. You have the option to pay the premiums when you want, stop paying them when you want, pay as much into the policy as you want. Now, the only key is that you have to watch that cash value and make sure that your policy is working in your benefit. That's why I always talk about what is the value? What can I do with my policy that I can create value while I'm still here, while I'm still living? Let's stop looking at it just as a death benefit. It's much more than that. I've given two examples here. I've given an example of the good, the bad, and the ugly. Two examples. The good I will talk about first is an example of a universal life policy. It's my policy. I call it my growing baby. I've had it for 6 years and I have paid a total of $1,674 into the policy. Now, what I have available as far as cash value is $910. That is okay because just 2 years ago, I only had $400 in this policy. So when I checked the cash value, it was at $910. I'm not touching that money. I don't have an emergency situation. I don't really need it in the immediate. The only purpose of this policy is to grow over time. So in 15 years, I expect this to be at a 5-figure mark. Okay, I am only paying $23.25, and I've been paying that for 6 years. The main benefit of that is that I have access to this whole $910 because what I paid into the policy has exceeded my cash value. I'm getting this money tax-free. If I wanted it, I have that available. Now, it'll take away from my benefit. The death benefit is at $30,000. That's fine. The only purpose, like I said, I have multiple policies in place. The death benefit on this is $30,000. Now, if I take out the $910, the policy is going to be around $29,000 as far as the death benefit. That is okay. That is not my purpose of taking out this policy. This policy's purpose is to see it grow and see my cash value at my access at any time. Now, the bad and the ugly is an example of a universal life policy where someone has paid the $4,752 for 36 years. 36 years compared to 6 years. And now the policy is insufficient. Insufficient funds, insufficient value, I should say, is how the agent worded it. This isn't good, okay? She's paid $11 per month for 36 years, $4,752, and now the policy is basically worth nothing. You don't want to run into that. You want to make sure that you check every year what your cash value is doing. You have access to that statement. You can ask the agent, hey, I want to see what my cash value is doing. They should be able to tell you right then and there, but they'll also send you a statement and it will show how much your cash value is growing. So you don't want to fall into the insufficient value bucket. You definitely want to see that value, see that flexibility as far as having something worth something, and having access to that cash value at any time. So again, I definitely go into further detail in my course about universal life policy and the full benefit. I, again, truly believe that this is the easiest and simplest way to grow value, also to create generational wealth. The easiest thing to do while you're young and while your children are still young is to take out policies so you can see the value that happens over time. So click on my link and book a free discovery call. And remember, let's start with life and value and end with power.